Good day, flocks. We have a brand new amazing video on Bitcoin and its impact on financial markets for you today. Therefore, like the video and subscribe to our YouTube channel before it starts to see more. How economic agents engage with society and markets has undergone a revolution as a result of recent technological advancements. Due to its significant market capitalization and technological infrastructure, Bitcoin has been deemed the most significant global cryptocurrency. In today's more common use of virtual currencies in financial operations, the pros and cons of Bitcoin have been the subject of numerous research. But the stock market hasn't been the subject of many publications in the literature. This paper's goal is to fill that gap. Due to the ideas of decentralization they promote as well as the possibility of enormous returns, cryptocurrencies have gained enormous popularity, yet, because of their continued high volatility, these assets pose a higher risk of losses than many traditional assets. As an illustration, in 2017 the price of Bitcoin increased from approximately $1,000 to a peak of more than $19,000 before falling to roughly $3,000. Then, until the end of 2020, Bitcoin climbed once again, hitting new highs of almost $60,000, before falling once more to $30,000 in the summer of 2021. A virtual or digital currency created to be used as a medium of exchange is called cryptocurrency. Cryptocurrencies use cryptography to safeguard and verify transactions, as well as generate new currency units, hence the crypto prefix, coins. With the help of cryptography, it is simple to encrypt data that is both simple to decode with the right tools and challenging to decode without them. As a result, while coins can be challenging to produce, verifying transactions can be simple. Cryptocurrencies are essentially entries in an unchangeable, pseudo-anonymous database called a blockchain that no one can alter, except under extreme circumstances when direct edits are made. Because the blockchain is a decentralized ledger that is checked by numerous nodes, it is very difficult or impossible to counterfeit coins. Additionally, it makes it simple to track any particular transaction across anonymous personal accounts or wallets. Global attraction. Alternatives to fiat money that are simple to use include cryptocurrencies. Although consumers from the United States or the European Union may think of cryptocurrency as a curiosity, many nations have poorly managed national currencies. For instance, the authoritarian government of Venezuela has gained notoriety for its exorbitant inflation, which has worsened the living conditions for millions of people who lack access to foreign currencies. To regulate the flow of capital and/or impose substantial taxes, several nations have put strong capital controls in place, whether legal or not, using cryptocurrencies to get around these capital limits. And taxes has fueled demand from both consumers and corporations. Due to this, many nations have begun to strictly enforce laws against using cryptocurrencies for nefarious purposes, such as making illicit purchases or sales abroad or evading taxes. Governmental reactions. Across central banks and financial institutions, the official reaction to cryptocurrencies has been, at best, muted. Many central banks are still being cautious in light of the market's incredibly high volatility, although some organizations have been supportive of them. Concerns about capital controls and tax cheating have also become very common. United States Federal Reserve, according to Jerome Powell, chairman of the U.S. Federal Reserve, there are still technical challenges to be resolved, and governance and risk management will be essential before cryptocurrencies are accepted by the general public. European Central Bank, former Vice President of the European Central Bank, Wouter Constancio, compared Bitcoin to the Dutch tulip bubble of the 17th century by calling it a tulip. And many other governors have shared his pessimism. People's Bank of China. The People's Bank of China thinks the time is ripe to welcome cryptocurrencies. But the country's government is actively repressing the industry because it wants complete control. Bank of Japan. According to the Bank of Japan, cryptocurrencies have no market. Bank of England. The central bank is one of the few governmental backers of the technology. after former Governor Mark Carney referred to cryptocurrencies as a revolution in finance. In 2018, the Venezuelan government introduced the petro, a cryptocurrency, purportedly backed by barrels of crude oil in response to capital controls of its own. Although the government claims to have raised billions of cash, many analysts question these claims. And the United States has banned its citizens from buying cryptocurrencies. Effect on international investments. When it comes to frictionless transactions and inflation control, cryptocurrencies have a lot to offer, but many investors now include them as assets in their diverse portfolios. Particularly, the market's lack of correlation makes cryptocurrencies, like precious metals like gold, a viable risk hedge. This has led to the emergence of numerous cryptocurrency exchange-traded instruments, ETFs and ETNs. Global reach. A user-friendly, digital substitute for fiat money is cryptocurrency. Although consumers in the US or EU may view cryptocurrencies as creative, several countries have handled their native currencies poorly. For instance, the dictatorial government of Venezuela is well recognized for its raging inflation, which has worsened the living conditions for millions of citizens who cannot access foreign currency. Other countries impose high tariffs and impose strict capital restrictions to control the flow of currency. Whether they are legal or not, cryptocurrencies may still be used to evade capital regulations and taxes, which has fueled demand from consumers and businesses. As a result, numerous countries have started to crack down on the shady usage of cryptocurrencies for tax evasion or unauthorized purchases or transactions abroad. However, some industry insiders worry that a cryptocurrency meltdown might harm the market as a whole, much like how mortgage-backed securities caused a larger global financial crisis. It's important to note that while being between $1 and $2 trillion as of right now, the market capitalization of all cryptocurrencies is still lower than that of several significant publicly traded corporations like Meta, previously Facebook, or Amazon. 2. However, cryptocurrencies as an asset class are a novel and unpredictable concept that may go anyway. In the end, many investors see cryptocurrencies as either a tool for speculation or a way to protect themselves from inflation, but as of 2021, the market's scale doesn't pose a systemic problem. Response to the financial crisis. Timing has been a major factor in the ongoing and even frenzied enthusiasm for the Bitcoin project since it was founded in 2009. The first cryptocurrency was created under the pseudonym Satoshi Nakamoto in the aftermath of the global financial crisis, when a rat's nest of financial organizations connected by shared debt and comparable commitments collapsed due to the diminishing value of a limited number of assets. When those interwoven commitments failed, they drove the whole banking and financial sector into a tailspin, killing or seriously injuring key institutions like Lehman Brothers and AIG, respectively, and putting others on the verge of collapse. We are all essentially on the hook for the large banks' reckless judgments. As the credit crunch that followed plunged the world economy into an extended ice age, the ensuing rage existed nearly since the beginning of the Bitcoin project. Although the original white paper is largely technical and boring, developer talks before to debut were significantly sharper. The first block of Bitcoin includes a reference to UK banker bailouts, demonstrating how widespread bank criticism had become by the time the Bitcoin blockchain went live. After 13 years, some aspects of the industry Satoshi's invention gave rise to resemble those feared foes: centralized crypto banks that exploited client assets to place leveraged bets have been struck by a series of collapses. Investment funds took use of the secrecy of their centralized balance sheets to conceal their risk profiles and collect loans that had abandoned creditors. Conclusion: cryptocurrency, also known as crypto, has taken the world by storm and is a hot topic of conversation all over the world after increasing in value by 825% during the preceding 11 months. The most widely used cryptocurrency, Bitcoin, BTC, has more than tripled in value since the beginning of 2021. rising from $7,000 in April 2020 to $20,000 in December 2020. After surpassing $63,000, the value of one Bitcoin is currently around $45,000. By 2022, according to several financial gurus, it will be worth $100,000. The first B2B SaaS platform in the world, NFT enables organizations and individuals to start their own white label NFT markets. Some of the most powerful investors and executives in the sector are supported by it. As the Shopify of the metaverse, we like to refer to ourselves. Our network is expanding more quickly with over 3,000 businesses, 15,000 happy buyers and sellers, and over $1 million in NFT transactions. Our staff has always been dedicated to providing interested users with the required knowledge before they set out on their NFT adventure. How was this video? Do you like it? Give your precious response in our comment section. Also subscribe to our channel.